All right, everybody. Um, this is the video about the indicators. There are two free indicators on TradingView that can be used for the ICT concepts. So um, let's just get right to it. The first one I want you to put on is ICT ICT Concepts by Lux Algo. Okay. Um, Click on that to put it on the chart. Click on the star to favorite it so if you never need it again. And I already have it up right here. And we're going to go into the settings on this. All right. So we want historical marked. All of your market structures marked. I put the last 10, and you can change the colors if you want. Uh, Up to you. Do not mark show displacement. You can or cannot. It's personal choice. I don't use volume imbalances. I just have them marked for some reason. But whatever. Order blocks. We definitely want our order blocks on. I put the swing look back at 10. Actually, I should probably pump that up. Uh, Swing look back, probably, what, 50 candles. Should be fine, I would think. Okay. Um, doesn't, wait a minute. Yeah, no, that doesn't really show what I want. Let's flip back to 10 and see how that affects. Okay. All right, that worked. Um, Show the last 15 bullish, show the last 15 bearish. Uh, you can change these colors if you want. The bullish break, um, I'll show you what that is in a minute, but you can go back and change those colors if you want. I just leave them grayed out. Um, we do not want the polarity changes. Uh, Mark use candle body. Um, and we definitely want to show liquidity. I've got it set at 4 margin, 5 liquidity boxes, and blue and red. Show fair value gaps. Do not mark balanced price range. And options, make sure you have FVG, not IFVG. So just plain FVG. I've got the last 10 showing. Colors you can change at any time. And that is it. Okay. Once you have all of those set, you can go back, rewind that if you need to. Once you have all that set, just click on default, save as default, and hit OK. All right. So next time you go to put it on the chart, it'll already be set the way you want it. All right. So the second indicator I want you to put up is Smart Money Concepts by Lux Algo. Okay. Again, click on it, put it on the chart, click on the star to favorite it so you don't have to search for it every time. Um, and then we're going to put that up and we're going to go, oh, no, I don't want mine in here. We're going to go into the settings. Um, all right. We want to turn everything off here. Oh, wait a minute. That's ICT concepts. Duh. Okay. Smart money concepts. Settings. We want to turn everything off. Believe it or not, the only thing we use this indicator for is previous highs and lows indicators. The daily, the weekly, and the monthly. I have mine set for yellow. You can set yours any way you like. Once you have those turned on, save as default, and hit OK. Everything else is turned off. That is all we use this indicator for, okay? Because everything else we already have in the ICT concepts indicator, okay? But these previous highs and lows show time-based liquidity. So we'll discuss that later. Um, but that's it. So let me show you, uh, get this. A bit better. It's not good. That's not good. That's better. Okay, I guess that'll work. All right. So what is all of this showing you? Um, well, one, give me just a second. I'm on my replacement computer because my last laptop crapped out on me. So it's a little hard to see when in the sunshine. Um, so this indicator pretty much gives you everything um, that you're going to need. Okay. Um, don't have any current. What are we on? Yes. Let's look at it here. Okay. So this indicator is going to show us a couple of different things. It's going to show us buy-side liquidity. Now this was buy-side liquidity and it got taken. Okay. You see what a liquidity move looks like, or a liquidity grab. So price was up above here. This was our sell side liquidity. And you can see how price went through it quickly and reversed quickly. Um, so that is a really good liquidity grab right there that could be traded off of. Okay. Um, market structure are your green lines and your little red uh, and your red lines. Okay. BOS is break of structure. MSS is market structure shift. The difference is a market structure shift is a possible change in markets uh, structure, whereas a break of structure is an actual change of market structure. It's been verified. Um, so you can have, we have the swing market structure changes, um, and we have the internal, which is just the small. Every time it breaks a low, closes below a low, or closes above a high, it breaks structure internally. Okay. Um, the blue lines and the red lines with OB on it, those are order blocks. Um, definitely strong levels to keep a watch over. Uh, this again is buy side liquidity, so I have buy side as red to go short from. Um, sell side is blue. You'll also get sell side liquidity in a line. Um, so this blue line starts here and goes across here. It's basically marking out a certain level. It doesn't have the box yet, but if enough touches come down into this line, then it will create that liquidity box. Okay, so that is that. Your fair value gaps, FVG, are shown here. Now this fair value gap is active. But what you can notice about it, the outline is a dotted line. That means the fair value gap has already been pushed into at some point. If there's a solid line around it, that means the fair value gap has not been touched yet. Um, this it was a green fair value gap, a bullish fair value gap. This red one is a bearish fair value gap. Um, this fair value gap is no longer valid. It's been closed through. So it does still show it here. Um, and I will show you uh, one other thing that you're going to have to draw in yourself. I was wanting to find a decent example of it. Okay. Um, so yeah, once it goes through the fair value gap that's been made, it will keep it in there for a little while. We only show so many um, until price moves on and eventually it'll disappear. But what happens, we have what's called an inverse fair value gap. Okay. And what that is, let's see if we can do it on replay. Okay, good. So this fair value gap is made. You can see it's a solid box. It hasn't been touched yet. Okay. Now when price dips down into it, the solid outline becomes a dashed line. Okay. And price finally moves up and then comes back down. And what we're looking for is the moment that the first candle closes out the fair value gap. So it was created on the up price. Finally, when price comes down and closes below that fair value gap, you see it disappears. Well, this has now become an inverted fair value gap. This you're going to have to draw yourself because the free indicators you guys have don't don't show this. My indicator does because it's a paid version. Okay. Uh, so if you just take your rectangle box and draw your fair value gap like you normally would, uh, let's take that out. Okay. I draw a rectangle like any other. Okay. Now you have an inverted fair value gap. All right. Now you can color these any way you want. I just have an orange outline in a gray box. Okay. So now I know this fair value gap has been inverted. All right. The reason I don't color bullish or bearish uh, certain colors or different colors from each other is because once price comes back through this again, um, I will take it off. But right now, price is below it. So I know this is a bearish fair value gap or inverted fair value gap. Okay. And the significance of these is obviously tries to go back through and doesn't. Okay. And you get a pretty decent little push down that could be traded. Okay. Um, and you can see it made another inverse fair value gap right here while it was trying to go through here. Okay. It also inverted this one. So you have to be a little careful. If you start drawing all of these, you know, you can get messed up. This is a nice strong fair value gap because it was made on a large candle. These little small fair value gaps, not saying they're not important, but right now my focus is just on this larger one. Okay? So I'm not worried about drawing in these others. But eventually price will move back up and go through this fair value gap or inverted fair value gap, and that's when I will remove that from the chart. Okay. because once price goes back through it again, the invertedness um, of that fair value gap is no longer valid. It's just price action has gone through it too much for it to cause too much support or resistance. Okay, so we'll leave that. All right. So yeah, you will need to draw your own inverse fair value gaps. So this one was inverted, but price went right back through it to the top side. I'm not worried about drawing that as inverted because it was inverted and then broken again. So, um, my indicator actually shows inverted fair value gaps. If we go to the one it were, I think we might find one. Oh, no, right? Because I don't have it turned on. Uh, so I don't use smart money concepts. I use Lux Algo's price action concepts, and that is a paid indicator. Uh, so yeah, if you want to pay for it, you can. Do you need to? No. But these are my inverted fair value gaps. Okay. So this was a bearish fair value gap made. Price went right back through it, inverted it. Now that's going to be a strong level for a reaction. When I said my order block breakers were gray, that's what these are. This was an order block right here. And when price came back through it, it broke through it and turns it gray. And that'll stay on until price comes back through it again, just like the inverted fair value gaps, because the inverted order blocks are strong levels as well. As you can see, it tried to come back down several times and then finally took off. Um, so the daily, the weekly, and the monthly highs and lows, those will be notated by whatever color you make them on your chart or in your indicator. Most of my charts are yellow. This one is purple um, for no specific reason. Um, but these are also strong levels uh, that have to be watched. Uh, you see price fighting. Once it gets above, it fights to go back, finally gets back, can't hold, goes up, comes down for a big, nice liquidity grab, and then shoots back up. And these are great because of parts like this, where you see it come back above, come back, retest, and hold. That would have been a very nice trade that you could have held pretty much all day long. Okay. Uh, but that's pretty much it. Um, that is everything that you're going to be using in ICT, along with the fib retracement tool. Uh, if you have any questions, you know, send them to me either in DM or in the Discord. Tag me so that I know they're there, and uh, I will get back to any questions as soon as possible. Um, the full ICT course explains all of this and even has a couple of extra little things in it that I haven't done here. Um, so definitely watch Casper's full course um, and get really good at identifying these objects and what they are um, and how we use them in our trading. So yeah, I'm gonna end this one here. Again, any questions, shoot them to me, and I will get back to them just as soon as possible. Till the next video, have a great day.